It seems like there's no end in sight for this market sell-off, and if you're watching your portfolios and you have your long positions, then it might feel a little bit like wiping your butt with tree bark because it is rough just watching these things take place. And so I come to these markets taking a look to see what exactly we could do to take advantage of these movements. I'm going to talk about what I see in this, what I was doing in order to prepare, and also just I'll share at least with you one of the positions that I've taken recently that really does help things out. So I'll show you a bit of watching. If you've been a long-term viewer for this channel, you're going to be very familiar with what I talked about here. I was talking about it back in the summer of 2024, saying, hey, we want to watch this. We haven't seen such a thing this big since the 1990s. And then we saw just a little bit of it again, I would say in the around 2015 or so, we saw this happen again on the charts when we look at SPY, tracking the S&P 500. And what we'll do is we'll look at the monthly chart on it, and I'll show you what I would watching for that. And then also we've been wondering about what sort of risk environment do we find ourselves in, and when that question will get answered, we would have big movements. Well, the movement that we see right now is answering that question. We are most definitely in risk-off territory. The pre-market this morning, something snapped around 6 a.m., about 6:05 a.m. actually. So the pre-market was looking sort of kind of not so bad, and then all of a sudden disgusting. So we need to watch and see. We do have non-farm payrolls happening today at 8:30. We also have the unemployment rate. So we don't want that labor market news to really be all that disruptive. Somewhere just after 11 Eastern time, we also have Jerome Powell coming out and speaking. So hopefully he gives some flavorful commentary that kind of hints at some sort of easing of monetary policy. Honestly, I think it's a little bit premature for him to say such a thing, but if he does, that's one of the 4 pillars that we have that props up markets, by the way, is easy monetary policy, which they've been talking about being significantly restrictive for some time. Well, between that and the tariffs and what we see for the Atlanta Fed GDP, we are getting to the point of max pain heading our way. So I said yesterday, or I don't think that we're necessarily there yet, so we're going to have to watch and see. Guys, I do want to share the charts with you, so let's get there. I'll show you what I've been seeing, what I've been watching, and what I've been doing about it. So this is the monthly chart that we're looking at for SPY. And if we go back to this part right here, this goes into about the time when we get into the dot-com bubble of things. And what you see as the prices move up, and let me actually do this for you so that way we can really see it. I'm going to stretch this way up for the volumes, but then I get to move this way up for the momentum, for the RSI. Prices up, momentum went absolutely astronomical, and then sold down, and then the momentum dropped over that time while the prices were rising. That is bearish divergence, and that's a really strong indicator that something's about to give. And you can see some of that happen when you go from the overbought crossing back over 70. You usually have some sort of dip that goes along with it, but it's even more pronounced when you start to see that momentum shift from above 50 down to below 50 is where you usually get the rest of it. So as you watch that decline, you can start, here you go, you get out of that overbought, so you can watch those lower highs and lower lows come in. And as you start to get right here, that lower low that you got, that's about that big turning point that you're going to continue to descend from there. So really until you see it, you can't really do too much until that 50 is solidly crossed. So maybe you don't catch the top, but then you can catch a lot of this that follows. Of course, if you're trading something like that, there's stop losses for a reason, just in case it's some sort of false signal. But you can also see with this yellow moving average on here that we go from being mostly above it to falling down beneath it. And then we finally get that dip where we try to get back up above it one more time, just can't do it. And then all down below, dangling off the moving average. That's usually a bearish time. Riding on top of it's usually a bullish time. So there's that bearish divergence that we had back in the 90s into, well, early 2000. I said early 2000s, late in the year of 2000. So moving over from there, if we fast forward into, there we go, the next time that we have it, so about 2013 to about 2015, when we had that flash crash happening, we have the prices moving up in the S&P, and then we have the momentum falling, and then we get that flash crash happening. And then we had maybe a little bit there, but honestly, this is what I want to look at. Here's the big one. This huge peak that we had back in January 2018, the next peak that we had in August of 21, and this final peak that we've had in November of 24. If you put a line across those peaks, that's significantly downward for momentum, that we failed to rise up to the momentum that we had before that while those prices were rampant. So that's a massive bearish divergence that has been about 7 years in the making. At some point in time, you start to pull back from that. This is another one of those pullback spells that we get. So I said that could really be at any point in time. This is still another one. Now, mind you, notice we spend the majority of the time momentum-wise up above 50, so still bullish with some overbought pieces in there. We spend just a little bit of time historically in that bearish territory. So we actually have to go back to the Great Recession to really see that time when you reach that peak fear. Now, hopefully we don't see anything like this because that'd be horrible. February of 09, our RSI measure went down below 20. So I'll tell you what, like in terms of preparation, like I'm not trying to say that anything here isn't pain. I'm not trying to say that just watching the market sell, watching portfolios with all your long-term positions just go down day after day and week after week. I'm not saying that any of that isn't painful to watch, especially if it's in your retirement accounts. What I'm saying is that if you have the ability to prepare and be able to shift things in order to be a little bit more favorable given the conditions, sometimes you can stave off some of that pain. And now, mind you, for my long-term holds, they've been going down too in terms of my long-term investments, such as Nvidia, for example. Tesla's another one that's out there. So yeah, they've been going down too. What do I do in the meantime? Well, one thing that you can do is dollar cost average, but you can also do things that do move inverse what the market does. And I'm going to get to some of those as well. So we see that pain, but we also want to be looking for those signals that we're reaching a bottom of sorts, especially on a historical basis for what we have. So right now, everything that we have is precedented. There is some precedent for it. We haven't reached anything unprecedented necessarily right now, at least in terms of the technicals that we see on the charts. So we'll be watching. Now, mind you, we can go down from monthly down to weekly, down to daily. I usually don't go down below daily for more of a longer term perspective of things, because then you start to get intraday numbers, which can tell you a little bit more of the near term activity, but they definitely take away from the broad scope of things. And I definitely want to look at the broad scope of things to find out, okay, where are the areas where we have that potential bottom coming in? And I got to say, watch my video from yesterday. It's an excellent video, put it out yesterday afternoon, and I think it's very insightful in terms of, okay, well, this pain, where do we go? Now, mind you, news can shift it. It can keep us from hitting the bottoms that I talked about there, but it definitely shows us some good spots where you could find those turnaround points. So let's get back into the charts. I'll talk more about catalysts later, which, by the way, if you guys want to see my buys and sells, my technicals, me and the other panel members over there sharing our analyses, our trades at the Discord, links in the description, 50% off your first month's membership when you use the code word cash. I'll tell you more about that later. So SPY monthly chart, we've been up for a while. As a matter of fact, just watch for those gaps up above the 20-week. Usually have a reversion to the mean, and that usually happens when you start to get some sort of subsiding movement with the momentum. So that's why I use the RSI the way that I do. So what do we see more recently? In any case, for the S&P today, again, tracked by SPY, we're down at 523 when we were closed at 536. And a lot of this, I'll go to the 10-minute chart just for a quick moment. A lot of this happened right at about 605 that we got this massive drop happening right there. And like I said, we have non-farm payrolls coming up just today. Unemployment rate also coming up today. And then there's also the earnings revisions that we have coming our way from the different analysts out there. Then we have big bank earnings where they're going to talk about the outlook that they see and what's going to happen to their forecast for the profits from the S&P 500 companies, for example. And so when they come out and talk about that, as we get into Q1 earnings season, I think that's where we really start to see some of that mess. But I also think that that means that Q2 could be that time that we see, which is right now, which is where we see that adjustment period take place, and then we start from a new baseline. So I think that's where we find ourselves at the moment. Now, mind you, look where the pre-market takes us. If we look left, it takes us back to this peak that we had back in the spring of 24. So we could find significant support here. Honestly, I think non-farm payrolls and unemployment rate have the potential to show us that not much different has happened. Now, mind you, unemployment stay at 4.2 or below. Perfect, we're good. 4.3 and above is where we start to get into the mess, especially given all the other factors that we have out there right now. We want to keep on watching to see what exactly is being said in terms of the unemployment rate, because once that goes off the rails, then we really start to see trouble come our way, and then we start to look for where we potentially see that adjustment end, and that allows us to anticipate the markets. So in the pre-market here, we could still have that bounce. Hopefully 8:30 helps us out. Hopefully in the afternoon or just before the afternoon Eastern time, Jerome Powell also helps us out with some things he has to say, and that he doesn't necessarily pee on the fire of a recovery. So let's move into the Qs. Guys, if you want to make sense of this stuff here, watch my video from yesterday. So just click on my channel title, go to tap on the videos tab, and just go to the video right before this one. You'll see it in chronological order there. Let me take down some of the technicals for a moment. This is once again the monthly chart that we're looking at. We're dipping down below the 20-month, and down below that is the 50-month. Look what happened. We got down to the 50-month back in 2022. That's where we found that peak pain. We almost got there in March of 2020. We got close to it in December 18. So max pain could be that moving average that we're watching for, which is pretty much associated with this area. We found two previous peaks. We found resistance and support right around that 344 up to about the 406. But like I said, watch yesterday's video for full commentary on that. We also see the bearish divergence going back from 2017, out of 2017 until now. As those prices continue to rise, the momentum just still falling off. This could be that adjustment period that we're looking for before the next round of millionaires are made. So we want to be watchful for that. IWM, I talked about this once again in yesterday's videos. Watch for that green band. We are actually trading down below the green band, and look how rarely we actually trade down below that number and how long we stay there. This is once again a monthly chart. Where's the worst of it? The pandemic, 1, 2, 3, 4. By the 5th month of trading below it, well, I should say 4 months below it, by the 5th month, we were back up above that green, and then we see that rip happening. So the Russell 2000 stocks, the small caps, which IWM is tracking, we don't spend a lot of time down below green. So we want to be watching for signs of bottom for IWM. That can really lead to some outperformance, especially if we hit a moment of quantitative easing to stimulate the economy, and then we start turning things back around. So we're going to have to watch. So what am I doing about this? So guys, if you join the Discord, what you'll see is my commentary before waiting for it to hit YouTube. And I put out lots of stuff over there in my own channel. The other experts do as well, whether it's stocks, whether it's cryptos, whether it's bonds, you name it. We have it all over there, including live trading. We also have the bread bot that can help you determine when things are about to move up, whether it's stocks or crypto or down. You can trade accordingly. I like to use options to build up my cash pile. And I'll tell you what, they're going to be printing today, as a matter of fact. So I'm actually a little bit excited about what we're going to see for that, especially given this drawdown in the pre-market hours. So if that maintains by the time it opens, I'm probably going to be looking at 100% up just from yesterday's purchase. Pretty excited about that. Posted over at the Discord. You guys can join us along with the thousands of members that are already over there. And it's the best community that I've ever been a part of, not only because of the products and services, it has the best community that you're ever going to find. They are just positive and kind people that are there to all help each other in that pursuit of financial freedom. So come on over, join us. And if you guys want to learn about options, technicals, trading using technicals with the bread recipe, which is exactly what I use when I trade, how I build up the cash pile in my portfolio so I can take advantage of these dip opportunities, you can get that coursework by using the link down in the description for Stocking Academy. Click on it, sign up for those courses using the code word DOCTOR, D-O-C-T-O-R. That's going to save you a ton of cash as well. Supports the channel, keeps me coming back with these analyses for you. It helps to support my family as well. And they've been wonderfully supportive of me, so I'd like to be able to return it back to them in that way. And I'd also like to support you guys as the viewers of this channel. So code word DOCTOR for those courses, D-O-C-T-O-R, code word CASH for the Discord. Let's get into the final charts here. So TLT is one that, I mean, just look at this thing. I shared these technicals over at the Discord. We have the descending wedge. We have the inverse head and shoulders more recently. That's within this part right here. We actually had one back here as well. So what happened with this inverse head and shoulders that we had? Well, we went from bottom to top on this thing, and we popped all the way up to $101.57, which actually coincides with what we could have right now if we continue to go risk off and we start to see more demand for those long-term treasuries. So descending wedge. If you pop over this top resistance trend line that's here, that is a bullish thing, especially if you retest it as support. If this top trend line is also the neckline that we have for this inverse head and shoulders, that when you confirm it, that once again, that's a bullish thing. We want to watch for it. So if we are able to do that, 101.57, and there is even a second price target all up here, 110.35. So TLT could be a good way that tends to typically move a little bit slower and allow you to adjust. If you use options on it, definitely a bit more risky with options because time is usually against you if you're going long on those options, which means that you're buying those options. So as sellers of those options, time is on your side. But that's a different thing for a different day. If we move over to TMF, which is the triple leveraged version of it, you also see the inverse head and shoulders, but you definitely get the outperformance to the upside or to the downside, which right now it's at about its 200-day, up at about $48, almost $49 per share. So we want to be watchful for that. So the last thing that I want to share with you about this TLT stuff, which is one of the ways that I'm hedging my portfolio, building up my cash pile, allowing me to take advantage of the different plays as they come in, as they come cheaper, such as NVIDIA should be about 2 digits right now. And I've been waiting for 2-digit NVIDIA to be able to jump back in. Tariff stuff, I think, is going to adjust. So we'll see that. I think it's a negotiating piece, even if they say it's not a negotiating piece. Let me take down my technicals because TLT butted up against its 200-day, which is this orange line right across here. We are just now today up above it in the pre-market hours. If we find that as support, that can also lead to a golden cross. So what we have for TLT, we have the descending wedge, which could be a bullish reversal pattern. We also have an inverse head and shoulders. That can lead to a bullish reversal as well. And then we also have a golden cross, which is where you have the faster moving averages crossing up above your slower moving averages, especially the 50 over the 200-day is one of those things that you can watch that happen. Furthermore, the momentum for the monthly chart has actually been steadily rising from oversold, moving towards bullish for TLT as well when you look at the monthly charts for that. I know I didn't show it on screen, but I do want to make sure that I'm respectful of your time. So TLT has been one that I've been eyeing up. TMF is one that I've been using to leverage the movements that we see with TLT. And I like to use options for certainly excessive risk is there as well, but well-timed brings along that extra reward, kind of tilts the probabilities a little bit more in my favor, if you will. And guys, if you would like to tilt things in your favor, like I said, Discord, join it. Not only me, but the other panel experts that are over there. If you want to see live trading, to watch that take place, Stockmo's usually there bringing that for you. If you want to see cryptos, Crypto World covers all things crypto. I do pretty much anything market, you name it. So stock market, crypto market, bond market. I like to have the holistic view, if you will, and also talk about just economic commentary and just my overall market analysis. And I share all that stuff, including my trades. You see the trade wins over there, people popping off all the time, just about how successful they are being part of that Discord. Guys, code word CASH when you sign up. Join the earners tier so you get access to absolutely all the products and services that are over there, and that you can see all the channels that are there as well. And those courses over there. I have 17 years in education. I'm an educational professional myself with my doctorate in education, instructional technology for my master's, educational technology for my concentration for my doctorate. I vetted these courses myself, also with my market knowledge as well. And I'll tell you what, they are the most solid, tightest courses I've found. And they are just made for the man, made for the common person. So go ahead and access those. Use the code word doctor. Code word CASH for Discord, code word doctor for the courses. You won't be sorry that you did. Come on over and join us. We'd love to have you. Guys, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.